Let's pull up a stock of Cosmo Films and what's happening over there. So they declared their numbers. Numbers were okay, but on a QOQ basis, there was an increase. However, the stock is down about 1% or so. The management is now joining us live from our Delhi studio. So if you could just take us through the numbers first. On a YOY basis, it's flat, but on a QOQ basis, you've registered a growth.
Yeah, that's right. First of all, the market is a little tight on the commodity side. The margins are down, and we have given in the media release as well that they are virtually kind of at bottom levels right now. And it's largely driven by both the international markets as well as the Indian markets, which followed the international market trend. And therefore, there's always a tendency when international margins are slightly down, most of the players try to push the volumes into domestic market. So I think in spite of all this, we have been able to keep a flat EBITDA numbers versus last year as far as the Indian operations are concerned. So I think, and that's largely been driven by the growth in specialty films and, the continuous reduction in our operating cost.
Right. So the gross margins declined by 250 basis points in the overseas market. Was there pricing pressure or it was raw material cost which went up?
Actually, it is neither of the two. In fact, even in the last quarter, we had losses in our international operations, and this quarter as well. And I think both these quarters, these were exceptional reasons, and they were kind of one time for these 6 months only. We had actually taken certain hedges in our Japan entity. If you really see, the Japanese yen has actually moved from 83, 84 levels to 120. So we were actually quite concerned in last 2 years, and we had in the last year had taken certain hedges. Last year they had given quite a substantial gain to us because yen went on up to 120 levels. But this year some of these hedges actually in the first 2 quarters gave us a loss. So if you really see, the entire loss in the second quarter is driven by the Japanese yen, losses, hedges that we had taken, which is roughly 3 crore. So majority of the losses contributed towards one-time non-recurring items.
Right. There were also some new capacity which got commissioned, because of which the cost was slightly higher.
Yeah, so I think, see, the global market is growing at the rate 4%, and even Indian market is growing at a pretty healthy rate, almost twice the GDP rate. So basically, there are capacities coming up. The market needs new capacity all the time, and therefore it's usual. But I think this time one of the reasons was the European markets had little pressure on the margins. Basically because partly it is seasonal effect, and partly it is also to do with the lower raw material cost in those countries, and therefore the delta between Indian pricing and European pricing was not much. So therefore the commodity margins were under quite a pressure in the last quarter.
Right. As far as these new capacities are concerned, do you think they will start to see ramp up and economies of scale would come in the coming few quarters?
See, as far as Cosmo capacity is concerned, it is coming up in quarter 4. And as I said, even earlier, that in quarter 4 there should be small, volumes coming up from the new line, but the entire new capacity should really be reflected in the next year financials.
Right. As far as the outlook is concerned, what would be the outlook going ahead? Do you think that overall demand scenario would continue to look on the higher side, and that's where you will benefit, and the shift towards premium products will also keep margins robust?
Yes, so I think there are 3-4 things which can happen. First is the commodity margins itself, which we feel that are almost at the at the bottom levels. So that can improve depending on what time it will improve, but it should improve sooner. Second thing which should help us in our case specifically is that our specialty portfolio is very large, and that continues to grow. In fact, in the last quarter, year-on-year basis, we have grown by 10%. In the first quarter, year-on-year basis, we had grown by 6%, and this quarter we have grown by 10%. And as we are continuously pushing that portfolio hard, doing more and more innovative things, we believe that that growth should get faster as we move on, and over the medium term we should really reap the real results out of the specialty growth. The other thing is, I think the US operations continue to show very good improvement, and last quarter again we had pretty good improvement, and that is the third thing that I see should continue to help us. On the cost side and on the better asset utilization, that is something that is an ongoing focus. We are trying to see that how can we from the same assets try to take more volumes, and I think we have been very successful in the past, and we had done certain things in last 2 quarters as well, which has continued to give us results, and we are able to get some volume growth from that as well.
Right. As far as the shift in the high premium segment is concerned, would that continue? Is that something which gets stability to the business as well?
No, absolutely. That is one of our key focus area. And as I said that, we continue to see higher and higher growth. And as we are continuously putting more efforts in terms of having a very robust pipeline, having a very strong sales team, customer-centric organization, and research-oriented, product development as such. So I think with all these factors, moving in tandem, over the period you would see that this growth should pick up more momentum from here.
Right. As far as investment into new capacity is concerned, is most of the investment behind, and now we should take dividends out of those investments?
As far as Cosmo is concerned, yes, majority of the capex has already happened because the line payment has been done in last quarter. So majority of the capex payment has been done, and the new line should, as I said, should have the commercial production in the Q4. So there is still small capex to be done in next 2 quarters, but I would say roughly 70-75% of the capex have already happened, and we should start to see results from Q4 of that.
Right. FY 18-19 would be an interesting year because you'll have the full impact of the Maharashtra investment.
See, as far as this investment is concerned, we have done it in the Gujarat plant, and which is a brownfield. And in the last quarter, we had actually done an agreement to buy new land adjacent to our existing plot. So that will give us economies of scale because it is just adjacent to us. We are yet to announce any expansions on that new acquired land. We are studying on this, and once we have necessary board approvals, we'll come back, and tell our investors in terms of what are the new investments we are planning to do.
Right. But overall, FY 18-19, you expect huge growth to come in?
Oh, absolutely, because there's a 40% capacity expansion that we are doing. And, we believe that it should give good results because capex per ton is quite low on this line. The operating cost per ton again would be pretty low. So, I think all these factors and along with this, the growth in specialty should help us, over the coming period.
Right. As far as, overall new launches are concerned.
Yeah.
So because of the new capacity, because of the fast changing R&D and, the overall premiumization.
Yeah.
You expect a lot more launches to come in from Cosmo Films, and some of them would become very big hits, and that would drive the numbers. So a lot more new products, new kinds of products, newly priced products from the company.
Oh, absolutely. We look to have one product every month, actually. And, even we had told our viewers in the past that we had launched Black Velvet, we had launched film for the cement bag, so there were a lot of launches. There was a direct thermal paper for the direct thermal printing that we had launched. In the recent month, we have launched lidding film. If you really see, if you go to marriages and any functions, you get these glasses. And if somebody tries to open these glasses, the water spills over. Many times, people use forks to open these glasses, and there's a real challenge to open them. And same story applies whether you try and open jams and honey or a lot of these things which come in small tray and there's a film on the top of it. And it's a big challenge in India to open this. So we have recently launched a product which is very easy to open. The other thing is that the converter who has to basically do the heat sealing of this on the container, all that they need to do is just print and heat seal it. So they don't have to put any adhesive. These films can be actually done on polypropylene, nylon, different kind of trays, polyester trays or whatever. So it's a very unique product that we have specifically designed keeping the Indian market in mind. So yes, our focus has entirely been to continuously launch new products, and we have been quite successful. I think the team is doing a phenomenally good job there.
As far as, the overall space is concerned, in terms of last 4-5 years have been good.
Yeah.
But before that, we had suddenly seen that, the cost had increased quite a bit. Crude prices had spurred quite a bit. That increased the cost, but the price could not be increased further. Do you think industry has overcome those fears? And now, even if there are any volatile moves on the crude, because of the move towards this premium products, these new products, prices would remain intact?
See, there are two parts of it. I think first, let me talk about Cosmo. That learning from what happened in 11-12 when a lot of capacity came up, it made us to think harder, and therefore we did a lot of things in, from 13 onwards, wherein we said that how can we utilize these assets better, how can we, reduce our variable cost, how can we increase our specialty portfolio. So I think we learned a lot of lessons from the last situation that happened in, once the new capacity lined up. So I think internally we have become far more stronger company because of all the efforts that we did in last 2-3 years, and we continue to move on that path. If you talk about the industry, I think yes, industry has learned some lessons. Obviously, I cannot say for the entire industry, but I definitely see that there's much more maturity. The players do understand that you cannot be putting all the capacity over a short period. But I'm not here to really comment on the industry. I would say that as Cosmo, we are internally becoming more and more stronger as a company, and would not be so much impacted by these cycles of commodity as such.
So you expect more stability in the entire revenues and EBITDA?
That is our efforts towards, absolutely.
Right. Thank you so much for joining us and explaining us about the company. That was the management of Cosmo Films saying that Q2 was not as bad as the numbers suggest, but there were some one-off costs because of capacity additions, changes in raw material, and that's how they would look at it. 1% decline. However, the management also said that the product demand continues to be strong, so that is something which would be a positive takeaway. Nifty, however, is down 32 odd points. Again, some of these pharma names are taking the markets on the lower side. Taking a break, coming back in 2 minutes.